There has been so many headlines around Tesla and Tesla stock this week, and many investors that are in the stock right now are very concerned that the stock may continue crashing. Can this eventually lead to Tesla being down around $100 per share? Let's find out. This past week in Tesla was literally a bear's paradise. The stock actually closed down the week down in the double digits. And the overall sentiment really right now in Tesla is extreme negativity, even though there were a couple of things that were bullish this week. So what we'll do in this video is start off with kind of going over the bad news first, because there's a lot of that, and then we'll kind of close off with some of the good news and what to look forward to in Tesla stock. Then of course we're going to answer the question, is Tesla stock heading to $100 per share? I'll share my opinion on that later on in the video. So the first bad news article that came up this week was surrounding the battery fire that happened in China back in April or so, where a Model S supposedly caught fire on its own. And this was all documented on video posted on a Twitter feed. And of course this naturally caused a huge stir in the Tesla community, with owners, rightfully so, getting worried about their Teslas. Tesla assured us though that this would be looked into and they would address it and fix any issues if they find them. Well, this week Tesla released an over-the-air update, and indirectly this is acknowledging that this was indeed an issue on Tesla's end. Now they claim that this is just all precautionary and this update wasn't necessarily needed, but they wanted to kind of push it out there just in case. So they still haven't fully accepted responsibility for these fires. So that's the story as it stands today. The official statement from Tesla reads, as we continue our investigation of the root cause, out of an abundance of caution, we are revising charge and thermal management settings on Model S and Model X vehicles via an over-the-air software update that will begin rolling out today, this was actually this past week, to help further protect the battery and improve battery longevity. So really at this point it's kind of a waiting game to wait and see if any more cars do catch fire, unfortunately. But this also indirectly kind of shows the benefits of Tesla and how they can just push over-the-air updates unlike other manufacturers, and they can actually fix potential issues with just software updates that they push out to the customers. So all in all, if this was a battery issue, this fix should have addressed that. Now moving on to our second negative article this week, it was surrounding a fatal crash that happened with a Model 3 back in March. Now investigation has been going on since then, but there has been some news this week that points the blame towards Tesla. Headlines are reading titles like Tesla on autopilot crash when the driver's hands were not on the wheel. And what was determined by the NTSB, the National Transportation Safety Board, is that the driver turned on autopilot about 10 seconds before the crash. So the car really was in full autopilot mode when the crash occurred, and that implies that Tesla's autopilot system and software was the cause of this crash. Tesla, however, still stands strongly by their autopilot system and software, and they released a statement that reads, Tesla drivers have logged more than 1 billion miles with autopilot engaged, and when used properly by an attentive driver who is prepared to take control at all times, drivers supported by autopilot are safer than those operating without assistance. So clearly, despite this fatal crash, Tesla still believes that a driver equipped with autopilot is still safer than a 100% pure human driver. But since the autopilot system is not 100% perfected yet, drivers still need to be attentive. They still need to be in front of the wheel, paying attention to the road, ready to take control if they need to. But the car can do most tasks for them, like overtake, change lanes, all those basic things. But just in case something does go wrong, like in this case, the driver should be ready to take control, and Tesla still stands by this. The company has never encouraged their customers to sit in front of the wheel and just fall asleep, take a nap, go on your phone, do whatever. They always say make sure that you're still attentive when you're behind the wheel, because stuff like this can happen. Even though they have 1 billion miles logged in their autopilot system that's learning every single day, there's still some things that could go wrong, and you still want to be in control if that does happen. Now the third piece of bad news can also technically be seen as good news here, but the market did definitely see this as bad news because the stock was down significantly at the end of the week here. So this was actually in regards to a letter that Musk sent out his employees, and in this letter it reads how he is going to crack down on all expenses in an effort to cost cut and increase savings. No expense will be exempt from this, no matter how big or small the expenses are, and this includes parts, salary, travel expenses, and rent. Currently, Tesla has $2.2 billion sitting in cash. However, in the email, he did say, quote, this is a lot of money, but actually only gives them around 10 months at the Q1 burn rate to achieve break even. Of course, the Q1 burn rate was extremely high in my opinion, so this is like the worst case scenario here for Tesla. But I'm glad to see that Musk and the team see the importance of this. And maybe the silver lining here with this new effort will be that Tesla will finally start focusing more on their financials, start fixing up things where they waste a lot of money, start fixing up things where money seems to be wasted, and eventually this will lead to a more reasonable balance sheet which investors are happier with. Now, this of course, like I said, can be seen as both good and bad news. Bad news, of course, is that you can see this as a situation where Tesla is kind of struggling still with their cash. They're getting tighter and tighter on the cash reserves, so they have to do this. But the good news, or the alternative here, could be that maybe they do see this as a potential issue in the longer term, so they want to address it now and fix it before it ever escalates to that point. Okay, now let's transition to the good news that came out this week. And that is that Maxwell Technologies is now officially owned by Tesla. Yes, the deal between Tesla and Maxwell closed this week. So existing shareholders in Maxwell will get around 0.0193 of a Tesla share for every share of Maxwell that they held. And really, this is a huge milestone for the company because this will help Tesla continue solidifying their stance as the best battery maker in the world. I think that this acquisition will eventually help Tesla drive costs down, improve their efficiencies, and also, of course, eventually drive them to profitability in the long term. Now, this acquisition had a lot of eyes on it, and a lot of bears were convinced, 100% convinced, that this deal would not go through and it would fall through. And now that we know the deal did go through, that's another case for the bears that's kind of thrown out the window here. So that laundry list of bearish cases is slowly getting trimmed down. Now, it's interesting because a lot of you did not even hear about this deal closing, and that is because it seems like the media right now is extremely bearish on Tesla. They just want to portray the bad news because that's what gets all the views. So that's what they want to keep doing here, just kind of follow the herd mentality and just kind of keep piling on bad news for Tesla. But really, if the opposite was happening in Tesla stock right now, the company kept moving higher and higher, this Maxwell news would have been a huge deal and you would have heard that news everywhere. Just keep that in mind. You can see that the media is very negative on Tesla right now, which is why I absolutely love this stock right now. And really, if I was short on Tesla right now, I may be considering closing my position in this stock. Sure, we could head a bit lower here from these prices, but I think over the next few years or so, especially after the next few quarters come up, I think that we're going to start moving higher in this stock. But that really brings to the question here, do I really think that Tesla is heading towards $100 per share? So looking at the chart, you can see that we continue making 52-week lows, with the stock now close to 45% from its all-time high. This is an extreme correction, and at this point, I would say the bearish sentiment on Tesla is more or less at its peak. I mean, you saw how many negative stories came out from the company this week, even though there was a positive article like we just talked about. Sooner or later, these stories will fade away and more bullish stories will start popping up. Maybe it starts off with strong earnings reports for Q2. Maybe it'll be with a big number of Model Y pre-sales. Maybe it'll be with the Gigafactory 3 in China finishing earlier than expected. Or maybe it'll be the right-hand drive version in Europe actually selling better than expected. There is a lot more for a bullish case here than I think for a bearish case, and I'm clearly on the bull side. Now, I don't think that we're going to be getting down to $100 per share in Tesla stock, but I don't think that it's unrealistic to dip around $200, maybe even slightly below that, between the $180 and $190 range. Now, I for one am looking at Tesla for the long term, at least 3 to 5 years, maybe even longer. If the company continues doing well at that point, I might just continue holding my position kind of forever or until I feel the company is changing. But at this point, it doesn't really matter to me whether the stock is at $220, whether it's at $200, whether it's at $180. That's just better value for me because I see the potential over the long term. If you're an investor and the company right now is kind of doing better than it was when you first bought it, or you see the vision in the future will do better than it is today, it doesn't matter if you bought the stock at $350 per share, at $300, $250, $200, doesn't really matter here. If you see the true potential in Tesla, you think this can be maybe a couple $100 billion company in the future, then dollar cost averaging strategy here over this time period would definitely be one of the best ways to go. Why wouldn't you want to scoop up more shares in a company that you believe in over the long term that has already proven itself here, in my opinion? This is pretty much a fire sale on a stock which is 45% off, and if you wanted to buy something at a discount, this is pretty much where you'd get that discount. But remember, I am a long-term investor. I am not looking at Tesla over the next week, over the next month, over the next 2 months. Anything could really happen in that time period. Like I said, we could go down to below $200 per share in that time period. It's really anyone's guess. Either way, guys, let me know if you're a long-term investor in Tesla stock, what you plan to do with your position. Are you buying more at these levels? Are you selling your position? Are you just holding and just not even paying attention to the stock right now? I'd really be curious to hear in the comments section down below. And as always, if you're interested in my Tesla position, why I bought the stock, I do cover that in this video here, so check that out. And don't forget to like and subscribe if you enjoyed this video and you want to see more videos like this. Thank you so much for watching. Don't forget to invest positive, and I'll see you in the next one. Peace.